And the story is because although the US economy is doing very, very well, so are other economies now starting to catch up, and Europe was the one that was behind.
Hello Lorne, and thank you for joining us again. We last spoke in the beginning of March, I believe, and you made some quite good predictions there. So we're going to have a little look and see how you got on with that as well as discussing the euro, the dollar, emerging markets, and a look at precious metals as well. So let's start by looking at the euro dollar. There's been a lot of talk about dollar weakness. How has this sort of affected the euro, and how's the euro performing overall?
Well, thanks for inviting me back, Jack.
You're
and
welcome.
in fact, it would be good to look back at what we thought and what's happening now. The dollar has, in fact, peaked earlier in the year and has come off quite strongly against certain currencies, such as the euro. So it'd be quite good to look at the euro now and ask, why is it doing quite so well? So the chart here shows the euro since the beginning of the year really taking off. And the story is because although the US economy is doing very, very well, so are other economies now starting to catch up, and Europe was the one that was behind and is now starting to expand finally after about 7 or 8 years of waiting. And the euro is catching all of that money coming into the Eurozone area. So now the euro's today at 117, which is actually quite staggering from 104 earlier in the year. I put in the relative strength indicators there, which are the coloured lines, really just to show that in fact the euro is well ahead of the moving averages, which probably indicates that there might be a bit too much froth in it right now and it might pull back. But certainly the direction looks like the euro is on the way up and the dollar is weakening.
And so let's move on and look at emerging markets. Has the dollar weakness been good news for emerging markets as well?
It has as well. I think that the emerging markets have had 6 or 7 years in the doldrums and plenty of trouble. And the global growth picture is looking quite robust, not stellar, about 3.4% this year and probably the same again next year, but that's okay. And the real worry that we talked about earlier in the year about China decelerating, well, China's still growing at about 6.7%, India's growing at 7.3%. You know, there are parts of the emerging markets that are steady and going strong, and that's bringing money back into the emerging markets, and emerging market currencies have benefited from a weakening dollar. And so that's a good tailwind to investors who, as dollar investors or even euro investors, investing into emerging market assets such as emerging market equities. They've got the growth in the equities, but they've also got the emerging market currencies as well. The graph here is showing the dollar against the basket of emerging market currencies. And you can see that, you know, the last few years have been really pretty horrid for EM investors, but the table has turned now, and since sort of the second half of 2016, you can see a channel that's quite clearly indicating that we've got an upward direction. And that's really helpful, which means that EM assets such as equities are up about 21% year to date, which is a great return.
Let's finish up then looking at precious metal markets. What's your view on them at the moment, how they're performing, and what do you expect to see going forward?
Well, I think that it's always good to consider them and work out why. In the case of precious metals, we like silver. The first reason is we like it because you can do less money with silver than you do with gold. It typically reacts with 2 or 3 times the sensitivity of gold. So if you're bullish on gold, you can put less money to work and buy silver. But it's there as a hedge in case inflation picks up and the economy cools. And there's, you know, always some concerns that things won't work out as well as everybody's predicting. And with very low inflation concerns compared to earlier in the year, that means that silver is being held down. You can see there on the graph, it's bouncing along at around sort of 16, but that seems to be the sort of level at which, you know, it won't go below. I won't make a prediction, but I think that probably if there's any kind of worry on global growth and things start to slow down, provided the dollar doesn't start to get really strong again, probably silver for 1 or 2% in the portfolio would be a kind of hedge.
Lorne, thank you so much. It's always a pleasure.
Thank you.
And thank you for watching, and to see more videos with Lorne, including some incredible predictions, head over to dukascopy.tv.